Today, and the big breaking story at this hour, the money that Essar Group earns from selling its stake in Essar Oil to Roseneft won't be paid to Essar Steel's bankers to reduce the steel company's debt. Rather, this money will be used to reduce the holding company Essar Global's debt. One Indian bank, ICICI, will benefit since it is a lender to the holding company Essar Global. That's what we have learned from our banking sources. And here's Latha Venkatesh, who broke that story with more details. Latha, what are you picking up?
Well, there was some hope for the bankers that if Essar Oil sold part of its stake to Roseneft, that money would be used by the promoters to bring more money into Essar Steel. But what we learn is, what the bankers told us is that that money will go only to Essar Global, which is the holding company, and that company's bankers will be paid. The bankers include largely the Russian bank VTB and Standard Chartered, and a little money also to ICICI Bank. Separately, when we contacted Essar Steel about this, Essar Steel agreed that the monetization of Essar Oil is a separate and independent activity. And I quote them, "As regards to Essar Steel, the promoters remain fully committed and have agreed to invest an additional 1,500 crores over and above the 14,000 crores that they have already invested as the equity in Essar Steel."
All right, Latha, but just hang in there. You also learned from your sources that there isn't any immediate sale of Essar Group's stake in the steel company, but both sides are also looking at restructuring the company's loan. What's the plan so far with respect to the repayment of dues?
Well, it's not as if the sale is off the table, but it's not as if something that's being considered tomorrow. What we learned is that the bankers are watching Essar Steel's performance. They want the company to clear back dues which were not paid, as also to pay their future interest payments on time. They say that if the repayment pace is slackened, then they will insist on the stake sale, and they also have received a restructuring proposal request from Essar Steel, but they don't seem terribly happy with it, because what the restructuring of 15,000 crore rupees of the total 30 to 40,000 crore loan is, that 15,000 crore, most of it will be converted into preference shares. Now, as we know, preference shares earn a very small dividend, if that. Sometimes they don't. And therefore, this will mean a loss of interest, loss of money for the banks. And therefore, they will have to weigh all options, whether some kind of a restructuring proposal should be given to Essar Steel, or whether a stake sale would bring the bankers more money, if especially it is a better funded buyer. Essar Steel also responded to this when we mailed them. They wrote to us that the company's debt restructuring proposal submitted to the banks does include a request to consider a portion of the debt be converted into preference shares with a lower coupon. However, the differential interest is agreed to be compensated for by the company as per a mutually agreed formula with no loss to the banks. This is not what the bankers agreed to when I asked them. However, Essar Steel also pointed out that their steel company's performance has bettered to such an extent that the total steel output will double in the month of March compared to what it was in November, and the EBITDA will be far higher, primarily because the output is going to double, and also because thanks to the MIP and the global steel trends, the prices have also increased by over $100 to $120. The only reason why they're seeking the restructuring is because even if all things go well, it will be tough to make the repayment and the principal repayment, which is why they wanted the restructuring.
Well, that story, I assume, Latha, is far from over. We'll keep getting you developing updates on that, but from